but I'm also working as the financial events chair with Alyssa.
All right. I'm Noreen. I am a digital marketing and analytics major, also a senior graduating in May, and I am the marketing officer for the Financial Management Club.
Thank you so much, everyone.
All right, so these are just some of the past events that have taken place on campus and virtually last semester. We had graduate student Sahil come in and talk about the financial risk management program. We had a corporate financial planning and analysis manager from PepsiCo last semester. And then you'll see a photo of Graham. He won the stock market challenge last semester. And then we'll be having some very cool events this semester too, including another stock market challenge and other guest speakers that Alyssa will touch on next.
Okay, so we definitely have a lot in store for this upcoming semester. To begin with, we're going to be having a lot of discussions on financial article-based current events. So just like what's going on in the news and how the market is changing. And with that, we encourage you guys to just like voice your opinion because that kind of helps really spark more discussion. We're also going to be having some guest speakers, and this will include a lot of firsthand advice from finance mentors such as Judy Stewart, Pellworth Partners, and Professor Pancock. Also, we're going to be just offering some job opportunity alerts. So that just gives you the opportunity to apply and add things to your resume. And then lastly, we're also going to be having the semester-long virtual Market Watch stock market competition. And with that, you're going to have the chance to win some prizes and some gift cards. And Nicholas is actually going to go more in depth about what the Market Watch Challenge is about.
Hey everyone, Nicholas again, secretary. I would like to introduce our flagship signature event, the Market Watch competition. Participate in this stock market challenge where you will be given in-game money to invest in real stocks that are updated live. This is a great opportunity to test your market knowledge without any risk. So you can see here that we have the flyer on the right-hand side. And the Market Watch competition is a semesterly event for us. It will begin on February 9th and conclude April 27th. Every student will be given $100,000 for a starting balance, where you can build your portfolio and react to the markets in real time, as well as compete against your friends and fellow FMC members to earn your spot at the top of the leaderboard by the end of April. We are currently in conversations with the School of Business to get the funding for the prizes for this competition. Primarily, we are looking at Amazon gift cards, but if for some reason that falls through, we will, there's been talk of Groupon coupons, but we will update you guys with that information next week before the official start, just so everyone's on the same page. So the first place prize, we are looking for, For first place prize, we are interested in giving a $50 Amazon gift card. Second place will be $30, and third place is $20. Late entries are permitted, so if one of your friends for some reason can't join us at the start next week, they're more than able to join us halfway through or even towards the end. If for some reason all the portfolio stock, you could join in at the last second and try to swipe everyone in if that's the strategy that you want to go with. Every 2 weeks, we will be introducing more sectors that we will focus on. Every 2 weeks, we'll have a specific sector which trades will be limited to. And I believe our first sector will be information technology, but that is up to change. We will provide more information at the official start, which will be at our next meeting.
Hello, everyone. So today, I want to discuss what's going on with GameStop and kind of like Robinhood, Wall Street Bets. I'm sure there's some of you that are already up to date and even probably know more than me about what's going on. But I just want to set the stage for people that are completely unaware. So this is an infographic I actually found on Wall Street Bets, summarizing what happened in I'd say the early half of this whole saga. So basically, a growing subreddit called Wall Street Bets, I think it's at around 3 point something million right now, has decided that institutional investors have, like hedge funds, have decided that GameStop is going to fall and have placed short sells on it. So what Reddit users have done is that they've rallied around GameStop and have actually dumped in lots and lots of money on it, trying to raise the price, trying to fight these short sellers. So you could see the share price at that moment was $148. I think at some point it either hit 400 or it was nearly 400, which is crazy considering it was around worthless, a few years ago. So let me just pull up the article. So I'll just put up some highlights I have in the article. So what happened with the GameStop price is that it actually shot up 928% for the beginning of 2021, which is really groundbreaking and I'd say even worrisome, considering there are like people that have devoted their entire lives to the stock market, and seeing a stock rally like this is, I think, once in a lifetime opportunity. Um, I know some people like myself try getting in on it just for the sake of it, not even trying to make a quick buck, just to see what would happen. But GameStop itself is a kind of like a physical location where gamers and people that have interest in video games and that kind of area can buy physical products like merchandise, video games, and video games accessories. But the problem with that is that lately companies like Steam have really taken over the market, and even Xbox console, PS5, whatever's new, have made it so easy just to download it online. It's so much easier than going in store back in the old days. So GameStop is really struggling right now. But the reason why Reddit is involved is that they found out that hedge funds have targeted this stock to fall. So what's happening is that they've rallied, just like I said before, and they've raised the price to nearly $400. Not anymore, but many Wall Street analysts have actually priced in GameStop at $15 or below, which is pretty disheartening for people that are still, holding GameStop right now. Other stocks that are like this, that are involved in this drama, is BlackBerry, Nokia, American Airlines, I think, AMC. So what happened with the whole rest of the stock market, is that it actually dipped the S&P 500 by a lot more than people think, and it was the worst day for the market since October, which is really hard to hear for anyone that has stocks in growth fund ETFs, just the whole market growth. But going back, what I want everyone just to understand is that this is the second half of the saga. That what Robinhood has done is that they either fully stopped users to buy GameStop, AMC, BlackBerry, Nokia, and even a little bit with crypto, but that's another story. And these users cannot even buy into the stock. And then a few days later, they're only able to buy limited amounts. So what happens is that this actually does affect the stock price, I believe, and would cause it to fall because certain users can't buy as much as they want. And even AOC commented saying this is unacceptable because, to put this into perspective, more than half of all Robinhood users own at least some GameStop stock, which is unbelievable considering how many Robinhood users there are out probably by now. So I just want to list some definitions. So a hedge fund is a limited partnership of investors that use high-risk methods such as investing with borrowed money. I think it's, I won't get into that, but it's in hopes of realizing large capital gains. So a good example of a hedge fund is, I think Bridgewater, if I recall correctly, is a hedge fund near us, and I've been to the actual campus when I used to deliver food, and it's so pretty. You can tell these guys make a lot of money. Gorgeous campus. Short selling is when is an investment or trading strategy that depends on the decline of a stock and the other security's price. And the important part of short selling is if the stock actually rises, which is what a lot of hedge funds have planned not happening, is that the seller must buy back those shares at a premium. And Wall Street Bets, as most people know, is a subreddit where people discuss stock and option trading. And Robinhood is probably the most popular brokerage that has broken barriers to make trading easier for the retail investor, which is kind of arguable now. And the SEC, this is like the strict definition, but the SEC is kind of like the big brother who watches over you to make sure you're not doing anything bad in respect to the stock market. So I think, when you hear insider trading, the SEC is the one who steps in and shuts it down. I know insider trading still does happen nowadays, but they really look down upon it. I think Elon Musk did a little bit of stuff here and there before, and he got in trouble with them. So this is what I really wanted to come to a point here, is that I want to ask everybody a few questions. Does anyone think hedge funds are arguably ethical against the retail investor? The retail investor would be like, the normal person, you, me, who probably dumped like a few $100s into Robinhood to see what would happen. They want to make a few bucks here and there, just the normal person. Would anyone like to comment on that?
Yeah, can I take a shot at that?
Yeah.
In the question of ethical, it's debatable because thing is, I don't think the hedge funds were anticipating that people would buy into something that has zero fundamentals, and I don't think they were anticipating that this whole new internet mob mentality, if you want to call it that, is going on. And the retail investor part of it, I don't know if they're specifically targeting the retail investor. We also got to remember is that these hedge funds are also managing pension funds, funds of that nature that people are trusting the hedge funds to run for them, like retirement accounts and other accounts. But I wouldn't say that they're being predatorial towards the retail investor. Yeah.
I would just like to add to kind of go off of a point that Graham brought up. While it might not be the hedge funder, the hedge fund individuals being aggressive towards the retail investors, I do believe it's the other way around. It's exactly how it was pitched, is because everyone who it was on the Reddit forum, the Wall Street Bets, basically betted they knew that GameStop was either overvalued or properly valued. They acknowledged that the only reason why they should all pile on to invest is to get back at the hedge fund guys. And while there's questions on whether or that should be legal or not, I think where the implication should be is Robinhood started limiting these trades, which is very unethical. And it starts to make you think, why would they do that? Robinhood makes money for every trade bought. Whether or not you make or gain money, Robinhood will take a profit. They'll skim a little off the top or off the bottom, depending on if you buy or sell. So the only reason why Robinhood would limit purchasing on these, to me, would be as if one of these hedge fund guys called up Robinhood, said, "Hey, we're losing billions of dollars. Is there any way you could help us out? Limit shares." They eventually, these restrictions were lightened, but they still limited fractional shares. You were no longer able to buy a portion of AMC. You had to buy an entire AMC stock. So that also limits the market. So it has a direct impact on demand. So they are forcing the market down. While it's arguable that the retail investors artificially inflated it, should these hedge funds, these giant hedge funds, be allowed to combat that and artificially bring it down through kind of scheming ways with Robinhood? So there are real ethical implications with this on both sides, I would say.
I just want to mention like, who knows what, all these stock prices could be right now if they didn't limit them. Like, who knows? Like, right now it's at $90 GameStop. And it does make me sad because I know like people have lost money on this, and maybe the short sellers won. Who knows? Uh, but like, if you think about it, like what I've heard is that like what hedge funds do is that they transfer huge amounts of funds to each other and try to like kind of like stimulate the algorithm. And like what I don't like about that is because what can the retail investor do? Like, you look at the stock trend and you see these like low volume but huge sell-offs, and like, you can't really recognize these patterns unless you're, a complete veteran to this or you have experience with hedge funds. So when you see these sell-offs, I don't think the retail investor really knows what's going to happen from here. So I just think it's a little unfair in that aspect. So any other comments before I move to the next question?
I just want to say about ethical. I mean, I'm sure people. There was a lot in the news where they use. I think his name is Clay. I forgot his name, but how he talked about the hotels because of quarantine last year. The hotels were gonna go bankrupt. So he went on the news say all the stock is gonna go down, and then on the news they tell people. So a lot of people sold their shares, but he bought it when they went down the price. So that will be maybe people saw that as market manipulation, what he did. So I think that's unethical. But the thing is, whether it's laws are broken or not, that's different. And I'm sure wherever hedge funds do, they don't want to get fines, or if they break the law, they want the fines to be lower than the amount of money they're going to make from breaking those fines. So really, it's like reality is not the same thing as right and wrong. It's winning or losing for them.
That's a really good point. And, you could switch out hedge funds with a lot of different types of investors, like maybe senators, like politicians, and there's definitely a good case that they're unethical.
I mean, people at the SEC, there are people who used to work at hedge funds. When they retire, they work for the government. And a lot of people say that, well, the CEO of Robinhood, he said that it was the SEC that told him, like, you need the money, like the full amount. So that's why he stopped people from buying it. But like, why would the SEC say that? So, yeah.
So the next question I have is that do you believe what happened with GameStop, AMC, etc., is going to happen with another stock soon?
Oh, absolutely. I
You really
feel
think
that.
so?
Yeah, I think that I don't think that there's going to be any regulation that's going to come out of this. It's going to be really hard to like put a policy or a law that limits retail investors from acting like this again. And now that the curtain has been drawn, I feel that like a lot of people are going to be more privy to this. But I also feel like it's not going to be as beneficial as some people think. When somebody reads the news and sees that, oh, GameStop shot up to $400 for like a second, they imagine themselves being on that bandwagon, that everyone who invested in GameStop is benefiting from this. But what I feel that a lot of people won't realize is that only the early investors are going to walk away with anything. And that also pivots on them selling that stock right when it hit 400. I think that there were a lot of losers from this, people who hopped on the boat maybe at 400, who thought it was going to go up to 1,000. Now they lost a crap ton of money. It's impossible to tell when to jump on the bandwagon. If you jump in too early, you lose. If you jump in too late, you lose. But I feel like inexperienced retail investors might attempt it again.
Yeah, I completely agree with Nicholas. I think that this was just kind of like the beginning of the saga. I mean, I don't know if it would really happen to the extent that GameStop did. Like, I think if there was another event like this, I don't know if it would, because I think this was kind of like the first one. So there was just so much energy involved. But I think that, like, I do think it will happen again. And I think that it's just kind of the beginning with, like Nicholas said, it kind of like sort of like it exposed a lot of the industry in a way that I think you can't really cover up now. And so I think it's just kind of the starting point for so many more situations like this to happen again.
Yeah, same. I think like it also exposed like a lot of new people to investing, which is probably a good and a bad thing. So I guess we'll see what happens with that.
Yeah, kind of like to go off of what everyone else said. I feel like too, like a lot of like investors almost kind of had like a sense of empowerment, kind of like, like if we like all combine our efforts, we can make something like this happen. And just like seeing that impact was kind of like an incentive to them. Like, oh, if we did it this time, like maybe we can do it again. Like again, like whether or not it will actually like benefit them is questionable, but they see it as like a potential investment opportunity and like to see the impact they can have. I think they would definitely try it again.
I'd like to add to what Nick was saying just really quickly. I forget where I heard the saying. I think like someone said that for investing, it's like you get in at the end of the beginning or the beginning of the end. That's where you make the money. So that's just food for thought.
That's an interesting terminology. Can you explain that a little more? How because I'm interested to know what that means.
Well, I mean, I forget where I heard it. I'm not like exactly sure what that means because that could have many different meanings. What I take from it, I just think that when there's a big trend and it goes up and people think it reaches its peak, maybe it's best to wait until it goes down again. Like, for example, in 2017 with like Bitcoin, for example, like you saw it like skyrocket. People thought that like when it was going up, it was going to be the best time to buy, but in reality, it was like several months later after it crashed. So.
Oh, okay. Yeah, that does make sense. I think I was determining the end was the peak, but that does make sense. You want to buy when things go low, not when the hype is at the highest it's ever been. I definitely agree with that.
Yeah, and like now Bitcoin's at like near 40,000. That was back then. I forget what the peak was in 2017, but yeah, that's just my point. Or what I was.
I remember when Bitcoin was at like 10K and then it dropped to like almost 5K.
Mm-hmm.
And I was debating buying it, but I just didn't have any liquid assets back then. It's one mistake to put in the books.
All right. Is anyone else want to contribute? Further to the next question. So, do you think the market is stabilized? Stabilized even being a subjective word. If not, when do you think will it be?
Let me take a shot at this one. No, I don't think it's stabilized right now. This is because there's many things going on. There's a lot of cash injected into the system. We're in a recession. When do I think it'll be? I think it'll be like 2022, maybe once everyone's like out and about. But the thing is, everything's based on speculation for the past 9 months since the crash in March. Like it shouldn't be like that. So that's my.
What that makes me think of is like, has the market even been stabilized at all since the pandemic? Because think the Fed injected like a lot of money, and I think we were green for a little bit, and then if you just look at the news, people are still dying. COVID is still around. A lot of people are unemployed. Unable to pay rent, trying to make ends meet, and the S&P 500 is still going up. Well, what's up with that? It just doesn't add up to me because we should be like judging by the news, we should be at a recession right now, right?
Yeah, but like what happened is that the Fed, they lowered the interest rates, and you have like Robinhood with 6 0, you don't pay. So that makes people go invest more money. Also, the housing market, real estate is going up because the interest rate went down. So it's like the best time because mortgages you pay in interest. Now, stabilize what you meant like subjective. I don't like it's all speculation. Like is Tesla, Bitcoin is like people the value of Tesla and Bitcoin is what people think is gonna be worth in 30 years. Because people think Tesla is gonna be like as big as Ford, GM, and the same thing with Bitcoin. People think it's gonna be like replace credit cards in the future. But the thing is, you don't know because Bitcoin to me is fiat money, to be honest. And the same thing with Tesla. Like Tesla, any company can like I don't know buy the electronic I don't know like motor and just put it in their own cars and change their oil engine and put the electric car. So Tesla has no competition really. But in the future, when people see profitable, like all the companies are gonna go. So I think it's a speculation always. So I don't, yeah. And I think GameStop is like was like it's like it shows that's all a fake number. It's not what the company's worth. It's what people did it to force the short squeeze out of the hedge fund.
I definitely agree with that sentiment. It seems like the economy isn't matching the stock market at all. We've seen such a huge recovery and then such a huge spike in cases, and there's more limitations and restrictions on commerce in America, and that just doesn't seem to be reflected in the stock market. It does seem to be all speculation, like you said. There was this number flying around. I'm not 100% sure of its validity, but there's a bunch of articles online that says anywhere from like 19 to 25% of all currency in circulation was printed in the last 6 months, which makes me think, why haven't we seen hyperinflation? You know, we're not backed by gold, which means we have the ability to print more and not experience hyperinflation. But how long can this go? And are we in a bubble that's just about to pop? I don't consider us being stable now, and I don't think we're going to be at least for the next year or two.
To speak about what Nick just said, I think he's spot on. You have all this money, and also I forget what the exact number that he just said. That I think I heard as well, which is kind of frightening. And to think that there's all this money being like sloshed around the economy while people aren't even earning, it doesn't justify it. So it does make me think that there probably is several bubbles that are being created or are getting exponentially worse. I feel like that's also why people are like flocking to things like Bitcoin and stuff that can prevent them losing their value, like from hyperinflation. Also, I would not be surprised, since there's a lot of cheap money and like people who are getting banknotes right now. I would not be surprised if there's like another housing crash in several years. I wouldn't count it out, to be honest.
Yeah, just like going off of what everyone said, I think it's difficult too, because especially like right now you hear like all of this like going on in the news in terms of like a new vaccine coming out or like this stimulus or like the new election. Like you hear all of these things that like sound like hopeful and like sound like it might like stabilize things, but then there seems to be like all of this other, stuff going on underneath, and then it's kind of like very, I guess, difficult to determine like why numbers like aren't matching up, kind of like what was said before. So I think that's like also interesting to think about too.
Anyone else? Yeah. Anyone else have anything what they want to say? So the next question, kind of bouncing a little bit of what Nicholas said earlier with gold. So does anyone even know what's going on with silver? Like if anyone's been checking the news, I can chime in maybe like I don't know, a little bit, but if anyone else can, go ahead.
isn't it like shooting up, similar to how I read this article online. It was comparing silver, like some AG, the whatever company AG is on the stock market, is like the GameStop of silver. I read that somewhere, but I didn't do too much research into it.
So, from my perspective, is that all these media companies are saying that Wall Street Bets is pumping silver. It's the new GameStop. But if you go over to Wall Street Bets, they're saying we're not saying that. We're saying just keep on holding GameStop. That's not us. So it might be kind of like, I don't know, the media is lying. I'm not really sure. I don't really know what's going on either, but I recommend everyone keep an eye on it because there's definitely some interesting stuff going on, in the background. So, this is a great question. Do you think the stock market has become untrustworthy?
So I think individually, like stocks, that's what people always say, diversify. So usually the average keeps going up, and I think it's gonna keep going on to like, I don't know, 50 years. It's gonna dip. There's gonna be recessions every 10 years. So in that sense, but then individual companies, they are untrustworthy. Like I said, Tesla is way compared to Apple. Yeah, and then it's people because people. I mean, I get it. Like people love Elon Musk, and the same thing with Bitcoin. People love this new future that they dream, but it's like before people never value companies that high. But I always believe that the average, the index, does better than most people.
That's definitely a great point. What a lot of people online will tell you, at least the ones you could trust, is that if you want a foolproof method to make money on the stock market, just put it in growth funds, ETFs, like SPY. If you Because at the rate of inflation we're going at right now, it's gonna have to go up most likely, if not. And it's almost like a foolproof method of making money. But I feel like outside of that, if you're going outside of blue chip companies, I'd say it's a little untrustworthy. And if you have like blue chip companies, ETFs in one end, like right here, and then you have all this gray area on the other end, I feel like that whole area is untrustworthy completely. I think like so I've so everybody knows Discord, right? So recently the Wall Street Bets Discord got shut down. So there are multiple Discords that are like that are all just revolving around pumping and dumping. Telling like hundreds of thousands of users to buy into this stock or buy into this cryptocurrency, and yeah, and then and then just pump it all up to a certain point, and then just sell it off. And those who got in too late definitely lose money. But if you're early to the pump and dump, you're gonna be making money. So I think that part is definitely pretty sketchy and untrustworthy.
To go off what Parth said, I think he's pretty spot on too. I like to think back to the term "history repeats itself." Back in the 1920s, there was low interest rates. People were speculating in the stock market, doing crazy things. Like, for example, this is very similar to what's going on with like the Discord chats and the pump and dump schemes and the Wall Street bets. And I think it's only a matter of time when there's like a currency crisis or something even bigger that will happen like several years down the line. So that's my take on it. And I would definitely say like that the ETFs are probably the way to go, like in regards to inflation too.
Anything else? Anyone wants to chime in? So, everybody knows that Robinhood limited shares at an extremely critical point for the GameStop saga, and arguably it changed the stock price, considering how many Robinhood users there are, and how half of every Robinhood user had at least a share of, at least had a part of GameStop. So, do you think Robinhood should pay the price for what they did by the SEC?
It should definitely be investigated. They should look into the actors who may have contacted them. I think they should probably bring in federal agents to do an audit and figure out exactly what happened and what was communicated to them before they decided to turn off basically all these stocks.
Should Robinhood be held liable? Yeah, I would say it definitely depends on investigation. What the CEO of Robinhood said basically was that they were protecting them, I guess. And what I think was going on is because I saw that they were pulling out lines of credit from banks and they raised like $2 billion or something like that. I think they're going to have a liquidity crisis. So I think that also raises the question or the new question that would be, is their business model really sustainable? Think about that. Like, what are they, zero commission? Like, how are they really making their money? Should people be really trusting this platform? That's my takeaway from Robinhood doing that, because what it seems to me, it was like it's a last ditch effort to save their butts, to be frank.
And one thing to mention, these hedge funds that are shorting GameStop, like what comes to mind is like I think Melvin Citron. I don't know like if I'm correct. These are the names that come to mind, and these same hedge funds have a stake in Robinhood. So it makes sense, but I don't think it'd be that obvious that Robinhood would act out like that just to benefit their investors.
Yeah, and just to add to that part, like, yeah, I think it was Melvin Citron and I think Point 72 as well was involved. And so, like, it's very clear why they would, do that. And I think to just answer this question, I think Robinhood should be held liable. And I honestly anticipate an investigation would kind of carry out sometime soon. I think, and this kind of goes to what Graham was saying, like, their business model is very much kind of skeptical. And I think this, like the situation that happened last week, I think that really brought that to light. And so I definitely think like an investigation should go on.
I have a question. Robinhood was representing about 40 different stocks before, and then they immediately cut down to 7 or 8. How can they do that if they represented all those people before and now they just cut it down to so few? What happens to all the others that they represented and now they decided not to?
I'm actually not sure. So they supported like a lot more company. They had a lot more investors than before, but now are you saying the investors?
Yeah, and they just axed a whole almost 3/4 of who they were representing, and then went down. And this all happened at the same time with all this GameStop also.
Oh, okay. Well, I think just like going off that, it's inevitable they're going to act in their investors' favor. As even if it goes into unethical boundaries, it's inevitable because if you only have that many investors, you're going to go in a certain direction, and it's going to be pretty obvious, right?
Very interesting.
I mean, there's one more thing I wanted to mention, but I mean, it's not coming to mind anymore. But should we all move on? If anyone else wants to contribute. So we added this slide in just to see if anyone has any expectations for the club or any ideas or any general questions. So You can send us an email me personally, or DM one of us on WebEx just right now. If you have any comments, questions, ideas, feel free. Does anyone want to raise anything right now?
Yeah, just to add to what Parth is saying, like, is there anything that you guys want to see in particular this semester, or anything that you would like us to kind of focus on as we're planning and trying to outline what the semester would look like? Definitely let us know if you guys have any suggestions.
I just want to say that this is my first semester, so I don't know. I just want to say it's nice meeting all of you guys. You guys seem like very organized with your PowerPoint. I'm impressed. And my name is Andres. I'm an accounting and econ major. So not as knowledgeable in finance. Personally, I didn't enjoy, I don't know, my teachers or even I actually internship in a hedge fund, and I did not like my coworkers or my boss at all. I think they're like the people in finance are people who like have superiority complexes. Like they just want to win, and like that don't matter if they step on other people. So I think that's why people like the Wall Street bets took down hedge funds.
So this is your first semester here with the UConn?
Yeah, yeah. So I graduated high school, and then I went to Westcon, and then I got my accounting degree. I was doing taxes, planning on becoming a tax lawyer, but I didn't. Uh, I feel like with my free time, I enjoy studying economics more, like world politics, commerce, and obviously the stock market is part of the economy.
Thank you so much for coming by.
Yeah,
Really appreciate it.
Yeah, I really like your presentation and everything.
Yeah, it's like, maybe I can just put like my 2 cents is that like what I want to do with the club is just like finance is cool, but like, it'll get to a certain point where it makes me want to fall asleep. So like things like GameStop, I love it, part of it sucks, but it's just so interesting to talk about. There's so many roads you can go down. Like where do you even start? The ethics behind it, or like how this even came to play. This could be like a once in a lifetime opportunity to even witness. Tell your kids, hey, I had a little bit of GameStop. I lost money, but that doesn't matter. It's just so cool to me. And there's a whole other side of it too that I particularly don't go down into. But recently we had I think he's a graduate student, Sahil. He goes really deep into technical analysis, and which is the complete other side of stocks. To my end, he looks at candlesticks, trading view. He looks at the volume of each trade. He looks at 15-minute markers. Super cool, super complicated, of course. And there's just so many different ways you can get into finance. And
Yeah.
yeah, so even Roshana later on in the semester, what we want to do is to show members what you can do within the world of finance, especially with a degree from UConn. You can go in a lot of different areas, like even like we said, go to a hedge fund, or you could go into investment banking or become a financial analyst. We'll have an opportunity where everyone can learn a little bit more.
I mean, that's really the reality of econ majors, because unless you become a teacher and do research, most people just go into finance. They go into market research, into analytics. But yeah.
Yeah, no, that's definitely something we want to talk a little bit more about this semester, like what exactly you could do with your degree, or whether it's in econ or in finance, and like where you can apply and how you can take kind of what you learn here at UConn and how you can transfer it to the workforce and the different fields that you can go into with it. So we'll definitely look more into that and discuss that as the semester unfolds.
Hi guys, I want to introduce myself, and my name is Lehi, and you can call me AJ. I'm the new student of the Master of Financial Risk Management, and this is my first meeting, this our club. And actually, I just arrived in United States for 15 days, so my English is a little poor. So I think maybe just now I didn't answer question. I think maybe I will adapt 3 months to adapt the English environment so that I won't waste your life in the meeting. So I didn't answer the questions because if I answer, maybe my English is a little slow. No.
No, well, thanks so much, AJ, for joining us. And don't ever feel like that. Definitely, if you have anything to share, we totally encourage you to, voice your opinions and stuff. And we're here to listen to your thoughts too. So we're excited to have you here and welcome.
Thank you. I heard from my alumni said maybe we have a tour to Wall Street after we get wax. Maybe we get the vaccine, to New York, right? Every year we have a tour to Wall Street, right?
I think maybe you're referring to like Bloomberg, maybe the trip.
Marlis, do you know anything
Yeah.
about that?
Yeah, we've gone to Bloomberg every year. We've also gone to the federal, down the federal bank and everything in New York. The problem we have now
Wow.
is COVID. It's
Yeah,
all
it's really
because of
cool.
COVID we haven't gone, but as soon as things open up, we definitely like to go on tours to different financial institutions. And it just gives you an idea of what's available, and definitely we'll start doing that again once the COVID restrictions ease up. But
Yeah, maybe we get the vaccine. Yeah, get the vaccine injection. We'll go. We can go.
yeah, we'll definitely go.
Thank you.
I think that wraps it up, right?
Yep. Do you want me to just say the student management?
Oh, yes. Let me bring that up. All right.
Okay, so the student managed fund is offered to all the campuses, and actually this will be the 4th year that we've had it here in Stanford, and we usually have a combination of financial risk management and undergraduate students. What you do is you get $1 million of real money from the UConn Foundation, and you as a team get to figure out what stocks you're going to invest your $1 million in. Right now, we're recruiting for the team that will start in May this year and go to spring 2022. The Student Managed Fund is open to everyone, econ people, it's open to finance people, but you do need to have knowledge and you need to have a zest for investing. Because what happens is this group, which is last year we had 2, 4, 6, 7 people. This year we have we started out with 14. I think we're down to 12 in a student group. And you as teams research and present different stocks in order to invest. The philosophy is a 10-year investment. So it's not the GameStop stock, real quick. It's a 10-year investment. It's a select group that gets into the student managed fund. And it's been in at UConn for 20 years now. We have our 20 years anniversary. The people that actually get chosen to be in this fund usually get placed like that because of the work they do, the research they do. And right now we're recruiting. We will have several dates that you can see info sessions. Our first one coming up will be on February 10th. And I will have Parth put that link on the website here. You will also be getting flyers for some of the other upcoming ones that are on the Stanford campus. We will have one on the 16th of February, another on the 25th of February. You don't have to remember these because I will post them. You are more than welcome to come and look at what we do. Now this, you'll see the Student Managed Fund website. Right now, you would go to this website. It's on the UConn School of Business website. And if you go up to the top where it says applying, I don't know if you can click on that. This is the application. Now it says that ours in Stanford is closed, but it actually is open. They just need to change this website. But if you click on application up here, Parth, click here for SMF application. So you would be judged, you would be interviewed with other Stanford students, not the Hartford and not the STORE students. What is entailed on your application is you have to fill out the application and you do a statement of purpose. This is extremely important because we do read these, and in that you're going to tell us what your background is in investing. You don't need to be an expert, but you really need to want to invest and really know something about the stock market, which all of you have really shown that you do. Again, you don't have to be an expert. You just have to be willing to learn and do research. And then we'll also see your resume. So on your resume, you definitely want to put any leadership positions you had, any internship positions you've had. All of these are going to impact if you get the interview to become part of the team. The commitment is almost a year, so you would get chosen by probably late April this year, and then you would go through the summer where they do some training, and then you would start investing the money probably in September, October in the fall, and then you finalize to invest your 100% of your $1 million by next March. I tell you what, there is nothing, it's a lot of work, but there is nothing that's going to reward you like this. We have alumni group that come back from the student management. All of them have really received outstanding positions in many heavy duty companies in the US and abroad. So this is something that the opportunity is coming up now. I will send Parth all of the information and it'll be available to you on the website. I will be sending out emails also in the near future so you can link into the events coming up. But I encourage all of you, if you are not graduating before May 2022, to get involved. Usually we like juniors and seniors, but that's not true. It really matters what your knowledge base is. So we do accept anybody that fills that fills all that criteria. Now, I don't know if many of you know Blake Mather. Blake Mather is the coach of this. He's the one in charge of actually doing the interviews, and he actually coaches the team. So you would be interviewed by him and probably Professor Panzak. So any further questions? There's a lot of information here, but I will keep sending this to Parth so he can distribute it to you on the Financial Management Club website. The other thing I'm going to tell you is there's a finance society which is equal to your Financial Management Club up at Stores. And they are actually having a conference on, I think it's March 5th. They also invite you to their meetings, and we can invite them to our meetings. Their meetings are on Wednesdays at 6:30 p.m. So you all can take part in that too if you'd like. What's great about the Zoom is it helps bring all of our campuses together. So we again will feed you information on that, but lots going on. There's also other competitions. I will have Parth post those. If you're interested in doing a competition, but maybe we don't have a team in Stanford, you could join a team in Stores, because most of the competitions now are all virtual, so it doesn't mean that you have to be in Stanford or Stores to be on those teams. Parth, you did an awesome job tonight, and I'm very excited about moving forward with this group. Awesome. Thanks.
Thank you so much, Marlis. It's a pleasure to be here, and especially today, of all times to be here. I think this is the moment. It's so exciting to be able to talk to a platform about this. Usually it's just to my friends, and it's all just speculation, but it's so fun. Thank you so much, everyone that came by, everyone that introduced themselves as well. It's a pleasure to have you here.
Thanks, everyone.
Great meeting you guys.
Thank you.
See you next time.
Bye-bye.
I think Nicholas asked what classes are required
Oh,
for.
classes that are required are Finance 3101. We encourage you to have Finance 3303 if possible, but it's not necessary. So you need to have gone through your initial Finance 3101, and for the FRMs, you can, you have the background already probably to be a part of the group. You have a lot deeper financial knowledge than some of the undergrads do. So we, embrace that also. But yes, in order to come into the group, you need to have had or are taking Finance 3101.
Do we need to steal professors, two of professors' recommendation?
We're not doing that this year because it was a little difficult to get that. But we will kind of check your resume and check anybody that knows you for the FRM. Go on personal recommendations. I know you're just new to the campus, but Larissa Burke and Jason Gorak are two people in the FRM, and we usually check on those. But you will list the classes that you're currently taking, and so we could check with those professors as to how you're doing. Okay?
Okay.
Thank you.
Thank you so
More
much.
information to come.
Have a good day.
Have a good night.
Bye-bye.
Thank you. Have a good one.
You too. Alyssa. Oh, she already left, man. All right. Nicholas, are you here?
Yes, sir.
All right. I think we're all set. That was a pretty good meeting.
Yeah, that was good.
We even went past 5 o'clock. We usually finish at like 4:45. So this is good.
Oh, and yeah, there was a lot of discussion this time.
Oh, also, I responded to your thing on the Google Drive when you had that little had the what's it called, the sheet for the Market Watch.
Oh yeah.
I responded like a little bit. I'll just do it now, but before blah blah blah. You should get it over with. So you said, should we continue with sector limitations? Oh no, not that part. Hold on. Which is the one that had the questions?
Oh, it was in the officers' meeting notes.
Oh, okay.
Got a couple questions there I was gonna bring up.
Okay. So should we do a soapbox for the launch of the Market Challenge in a few weeks after saying it's not too late? Oh, Alyssa, you're back.
Sorry,
Yeah.
I was about to click off and I heard you call my name.
No, I just wanted to say, just one thing, can we update the website?
Yeah, so what should I start with?
Okay, first thing, I'm gonna change the WebEx link. Right now it's like part the site or something. I'm gonna make it like Yukon FMC so that
Okay.
it'll look a little bit more cleaner, and then we can update it on the website.
Okay.
And then I'll send that to you whenever that happens.
Okay.
And I guess for the first thing, maybe I can give you like a little checkpoint.
Okay.
I'm gonna look at the website right now. We could update the leadership just with like a few pictures of us.
Okay.
You could just
Should I-
copy the Yukon Data Analytics Club.
Okay.
Mm-hmm.
Should I reach out to everyone and just ask for a little bio for them?
Yeah, that sounds good.
Okay.
And then Marla said that she wants the SMF linked on here as well. So once I send that email out, maybe you can format something with that as well.
Okay.
And you can take your time with this. Don't rush into it. But I think
Okay.
that should be it.
Okay. Should I make it one of the little tabs at the top?
Yeah. Mm-hmm.
Okay. Okay. I could just kind of provide info on it maybe, and then just the link to the application on the website.
Yep, that's perfect. Thank you.
No problem.
For the market, do you want me to make a new game on our Market Watch account? I mistakenly made it on my Market Watch account.
I mean, thinking right now, it shouldn't matter, right? But